What's going on, everybody? Chris here. Very interesting things are happening. We got to wait till the weekly close, but looking very interesting. We're really close to this moving average channel support. You know, the question is, do we stay above it? Do we stay above it? Do we close below it? It's one of the questions I've been having. And another one that I've been having is, what happens next? Do we come up and get this untested breaker? So that's another question that I've been having. Like, I would like to go up here and short to, monetize this area because that's a lot of money in between in the volatility if it were to happen versus just going straight down. And then another thing is that I use these auto trend lines, and I got one here. And if we get a close underneath, do we get a test at just similar to what happened over here, where we closed right on it, or and then the second candle came up and wicked above, and then the third candle was the green light to move on to the next level. And will I get the same thing with this candle or with this line? Will it hold and keep like a ranging 8 bar and then resumption to the downside? Like, that's something I would like. I don't think it's gonna. I mean, I think it's gonna range most of the day. I mean, unless we come up and touch this line and get rejected and then start making our way back to where this close is going to be, I'm not really too concerned, but it would be something that I would like to catch if possible. And as far as like the overall interest in just what's happening, here's the S&P 500 on the weekly MACD. If we could take away this 50% line, that'd be great. I didn't think that the 50% line would be a big deal. It looks like I can't get rid of it. Yeah, I can't get rid of it. I want to undo that. Oh, I can't magically undo it. This is the one. So we're about to get a cross on the MACD weekly, 310.16. So this would be like a really strong impulse. And if we're to continue getting more down movement, it will for sure cross, and then we would see an impulse. And we don't know if it's going to go sideways and hold, or if it'll go to the bottom. But the risk is to the downside because there is liquidity on the downside, roughly 15 to 20%. So that's a lot. So as far as like everything else, I mean, we broke a daily breaker according to this, and we haven't retested it yet, and I don't know if we will. There's just been such a strong sell-off that the bull trap is in effect. The bull trap has been sprung. The bulls are trapped. So whoever bought at those highs are trapped, and they either have to jump off all at the same time or they hold. And for the market's sake, you kind of want them to hold. But it looks like we're really close to crossing on that weekly MACD, which would result in a huge leg to the downside. And I want to believe that it starts with this line, that it would be a really good entry on the retest, resumption to the downside. And as far as like market structure break, I mean, we already had the H4 market structure break, which I already traded. We're kind of in a nested H4 breaker. So usually when you're in a nested H4 breaker, you just don't want to do anything. You want to wait until the dust settles and a pattern kind of forms. And this is like the beginning of that pattern right here. It could result in other ways, like this one. If we close the day below the 72, if we close the day below the 72 moving average, I think we'll be totally in bear territory to where we could just we got the all clear to go lower. On the week and the day, it just seems like we're really punching through really hard on these three candles. Roughly from the peak to the bottom is roughly like 7%. So that's a lot in like 4 days. Like roughly 3 to 4 days, we've traveled 7%. So that's pretty big. I mean, we totally are back below the 150 moving average to where those bulls are trapped. And all it needs is a weekly close below it, and it's set in stone. A reclaim to the downside, and a lack of holding on the bulls. So that's pretty much the narrative that we see here. And all we're doing is just waiting for an entry. Right now it's quad witching, so I think it's like $4 trillion of assets are expiring today. So we're going to find out what happens. I'm probably not going to be trading it. I'm going to watch to see what happens on the 8-hour close. We got 32 minutes, and we're pulling back up. So it's going to be really interesting. I don't know what's going to happen, really. But could be an interesting place to short on some of these patterns if we get like a reclaim to the downside. But something that I'm trying to exercise discipline in is not trading on Fridays. Even though it might be a really good time to trade. I would like to pass these evaluations as fast as possible, and maybe there's a surprise like 3-5% down move. I don't know, but it would be really interesting. And then as far as other momentum indicators that we have, most of them are just pinch into the downside. The ones that the daily has pretty much committed to showing that it's got a strong downtrend. And then this weekly, once the price line crosses over the trend line and the trend line starts dropping, it's going to go really hard. That's all it's pretty much saying. It's going to pinch and it's going to go to the downside, and it's going to be high velocity or high speed or fast moving price. I mean, that can't really think of too many adjectives there, but it looks like if things don't recover, if things don't hold, they can fall apart really quickly. That's kind of what it's saying. Looking at the credit spreads, this is the one that I want to see on the close, on the weekly close, just because it matters so much. HYGH, LQDH, and right now we're in this no man's land. That could be either a fill gap or a speed gap, and it could be a speed gap on the way down. I mean, the market hasn't opened. We're on pre-market, but it's going to be a really volatile day. One, it's quad witching. Two, it's Friday, and now there goes the bell. We just opened, so we're going to see what happens on this S&P 500 cash. Waiting to see where we close in 30 minutes. But really exciting time, just to be able to exercise the ability to have an open mind, to be able to learn on how dynamic you need to be, how you need to be able to take in different angles of just what you want to believe versus what you see. And what you see should ultimately come before what you want to believe. But our beliefs are so strong sometimes when we want to force an outcome, when we have a greed, or when we have a fear of missing out. We end up having a clouded assessment analysis. So this is just a really interesting time, just to be able to open mind, open just the process to being revamped of just how we think about things. Just because sometimes there's other things that other people know that's worth knowing, and it's it shouldn't just be them that's profiting. It should be me as well. So like that's kind of my attitude. Like if it's profiting someone else, well, I want to profit too. Why can't I learn that? That's kind of my attitude, and I want to observe and see and learn, just because that's just what it takes to make it in this cold business. So, looks like the credit spreads are opening lower, so that's going to be really interesting. LQDH opened lower. HYGH, we're waiting for the open on, but LQDH is open lower. We can already see the bar. It's near the lows, so this thing's either going to just be making its way to the lows, or it's going to just go nowhere, or it's going to go up. Like we're pretty close to support, so we're going to find out like how much of the range this day takes. Maybe it just stays in the middle. But for the most part, this is like a really exciting time just to see like the culmination of just kind of all of the analyses from all these smart people, and just how it like comes to a conclusion and develops, because that's kind of what the market's about. The market is about being able to have your best bet. There are no certainties. There's only probabilities, and that's kind of what leads us down this road to want to profit from those probabilities, right? So I don't know if it's going to be really slow, but I'm planning not to stay here super long. But I pretty much revealed a little bit of a trade plan coming up, which is I want to see a retest on that diagonal support line, and I'm gonna want to short the retest of that, and then the resumption of it. I want to short as well, and have a stacked position to the downside, and we'll see just how much of a runner I get, and see if I can have another $50,000 day. Obviously it's not real money because it's an evaluation account, but soon, one day, it will be real money, and I want to be able to command that kind of power in one day, right? So we'll continue to look for opportunities and setups. We'll continue to just monitor really important things that would open our mind and make us decide to do something different. And that means not shying away from things that are important, and really seeing for what it is. And then hopefully we could profit from it. Obviously I'm 20% of the way to the goal, and I want to make it to all $20,000 profit per account, so roughly $120,000 on profit. So we'll see what happens. It's something I can't get too carried away, but I think the approaching my approach would be for this today would be just observe, let the day close, and just kind of take note how the performance of the day. I would like to see a doji, or just what's it called, a candle of just unchanged or indecision, but you can never know on Friday just how institutions are going to want to close the week, and in just their positions, and covering their risk. So we'll see how things develop. But as far as like the macro outlook, holding on and like praying to the sky for a lagging indicator to be seen as positive, is in hoping, wishing, and praying is not my idea of good risk management. It's just I don't know. Like it doesn't sound like good risk management to me. So I instead would like to find a way to find asymmetric risk to reward, right? And you want to be able to be have access to obtaining that asymmetric risk to reward, and sometimes that's time. Sometimes it's being able to use your analysis or assessment skills and being positioned correctly. So it's different for every person, and there is no wrong answer. It's just you know the swath of just what makes the market. It looks like this is not really moving a whole lot. We'll go ahead and look at the S&P 500. So we did dip below. We wicked back above the 72 moving average. We'll see just how much we can hold. We go to this diagonal line. We wicked back above this diagonal line. So the interesting part is like 22 minutes from now, where do we close? That is the question. Where do we close on the 8 hour bar? And then, so a little bit of just the plan for content or just what the videos I want to make. I want to make a video on the ultimate portfolio for 2034 for the robotic revolution. It looks like a really good chart as far as when 2034 comes around, just because there's a lot of fragility that happens between now and 2034. If you wanted to start the portfolio now, that wouldn't be a bad idea. I would just recommend buying at the lows whenever those capitulation moves come in. And you'll know it's a capitulation move because it'll be something very swift and very shocking. And that's the sign of a capitulation move. And that's when you want to really buy. And when it hits like a weekly breaker, market structure break, or it hits a weekly demand zone or weekly support, that those would be areas of just where I would invest. Obviously, if there's like multiple weekly demand zones in the same place, I would just move it to the monthly and just start a monthly support, and then just work my way up. If it doesn't hit, if we don't get it, you just do a weekly market structure break instead of just the monthly support. So, the lineup of sequence of content I want to do is I want to do the Robot Revolution, the Charles Schwab portfolio on Robot Revolution, taking 25 stocks and reducing it to 10 stocks, and then how I would make it, and the position sizing. I think that would be really interesting. When I made the Covey portfolio for this short position, I tuned the position size to where I thought would make the most return if we were to reach some kind of capitulation move. And I made it so the leveraged VIX was the highest, the leveraged S&P 500, and leveraged what's it called, the bear leveraged S&P 500 and oil short were among the close second. I think the number one was the UVXY, the leveraged VIX, and then everything else was a second place, which was a negative 40% on the crypto coins, and then 40% long on the S&P 500, 3 times the bear short, and the 2x bear oil. And then I think the 2x real estate short is also 40%. So we'll see how that plays out, but I feel like I optimized that to where it was like the best weighting, which is, I gave most of it to what I think would be the leading horse, and then the rest, they have a equal chance of just doing really well, whether it's the negative whether short crypto or it's like 2x short real estate, or it's the 3x short S&P 500, or the 2x short oil. Like I think they could all have an equal shot of just performing really well, and that's why I pretty much like weighted all those that came after the UVXY to being the same. And then when it comes to the Charles Schwab portfolio, like I want to do something similar. So that's going to be next on the list, and then something that might come before it or after, who knows, would be just a journal entry on the week for my trading performance, Tuesday, Wednesday, Thursday, the good, the bad, the ugly, and just recounting just kind of what had happened, and really going through my template of just whether it's the trade plan and how well I followed it, or just what I've learned and what I'm going to do differently. I think those at least are going to be the template for just the review on the week, and we're going to just go from there. But that's pretty much it. As far as like the overall summary of the performance of the trade account, it's basically around 50 grand for this week profit. So around 50 grand profit. So out of 120 grand for the goal, I've roughly made 20% of the goal. And that's, I think that sounds about right. So 120 grand. So 20 grand per account. So that's 6 accounts. So that's 120 grand. So 120 grand times 20%, 0.2, puts us at 24 grand. So maybe I have a little more than that. So like 50 grand, 120 grand minus 50 grand. 70 divided by 120. Minus 1. So roughly 40% performance. Obviously, I also came back. I was negative, so like that kind of has to get taken into account. But roughly, yeah, I would say 20% of my way to the goal. Just because the 50 grand doesn't account for 100%. I think roughly half of that is accounted for, and that's why it shows as 40%, but it's actually 20% of progress to my goal, which is not bad. I mean, 20% progress for the first week is phenomenal in my book. I mean, making 50 grand in that one day would seem pretty crazy, which was 8.7 grand per account. So that's going to be in the content pipeline, which is and also the weekly close analysis. So it's going to go the ultimate portfolio for 2034 and beyond. That's going to I think if I were to figure out what's going to be the next FANG stocks, I think this robot revolution would be the next FANG stocks. And obviously, like, that's a bold claim. There's no way to verify that. And it's really difficult to even, in the first place, begin to attempt to do something like that. Find out what's the next FANG portfolio. But that's kind of like my best guess. Like if someone held a gun to my head, said, "What's your best guess of the next FANG portfolio?" And that, based on my research, that's what I would pick if I was in a competition and I had to win first place. I would, and it's over, I don't know, 20 years. I would pick that, Robot Revolution portfolio, and I would start it near 2034. I would buy near a recession near 2034, and I would make sure I'm fully positioned by 2034. And I think that's when the true colors would shine, just because that's kind of what the pattern looks like, and compared to the broad market. So, the close I mean, in terms of the portfolio is similar to it, to where it's kind of like it is, one is the natural chemicals from natural gas. The second one, the first one is like water preservation, and then the other one's like chemicals from natural gas, and then it's the robot revolution, and then other ones like junk food, um, specifically like caffeine. There's one for caffeine, and then there's one for junk food, and there's one for the aging population. And I don't know, I just feel good about the demographic, no, the robot revolution, and that that's the next big thing. That's the next big trend, and that's so I'm gonna maybe talk at length just a little bit about that. And obviously, I would like to start some fundamental research. I already know Amazon and FedEx are making the robots for unloading trucks or loading shelves, but that's going to be like a really interesting topic and video that would maybe take multiple videos, and then obviously going over the trade plan journey for the week, and then just the weekly analysis. So those would be the next three things I talk about. So thanks for watching. See you in the next video.